This is Scott Becker with the Becker Private Equity Podcast. Today's story is things that fly too high often come crashing down. And really, today's topic relates to WeWork, and I'll cover a few other business stories too. But WeWork stock is down 50% today on notes that it's likely to file for bankruptcy. And WeWork was one of the true sort of growth companies back pre-pandemic, where Adam Newman seemed on fire by taking old spaces and turning them into shared workspaces and trying to create a culture that people work together from different businesses. And rather than owning an entire space or leasing an entire space, you lease part of the space. Skeptics said that it's just a different model for subleasing space. He tried to turn it into technology, community, and so forth. At one point was valued upwards of $50 billion or so, had tremendous financing from SoftBank, Andreessen Horowitz, a lot of the great investors in the world. And this thing ended up, of course, getting hurt in the pandemic. So people could blame the pandemic for it. But really, it was really showing signs of stress before that, as it got too big for its britches without them renting more space than it could possibly put to work, and sort of building sort of one of these flawed type of models like the Dutch tulip, inflation, and so forth. So the real lesson today is things that fly too high often come crashing down. And when you get excited about one of these things that's flying so high, and it doesn't have necessarily a great fundamental business, you have to really decide, are you gambling in this? Are the fundamentals there? Is it really make sense? Or are you just really taking a flyer on something that seems to be crazily valued? And that seems to be the case here. I mean, it ties back to a lesson we talk about investing all the time, which is don't invest in things you don't really know or have a conviction around. And so we generally tend towards the S&P 500 index and treasury bonds. For I kind of know those. I'm an investor in a handful of other stocks, a handful of other venture capital funds and private equity funds. But at the end of the day, with all these other things, they're guesstimates versus real convictions. And so to me, the safest is the S&P 500 and the treasury bonds. The other thing that we took a flyer on the last couple of years was some Bitcoin ETFs, some cannabis ETFs. And again, that was based on not true convictions, not really knowing those, not really knowing the fundamentals. And when you invest in things that are high flyers, unless you've really made the effort to understand them, and I'll clear that it's almost impossible for most of us to do that, given the amount of inside information out there and everything else, that you ought to be cautious. And at least if you're going to do it, invest small portions of your investment portfolio, not your core. In any event, things that fly high often come crashing down. The story of WeWork. Thank you very much for listening to the Becker Private Equity Podcast. Thank you very much.